Welcome to another episode of Texas Capital Live. I am your co-host, Steve Kennard. I'm the president of the AI Innovation Association. I'm joined by my friend Lee Bratcher, the president of the Texas Blockchain Council. We're excited to continue our work with Texas Capital Live. Texas Capital Live is not a bank. We're not an investment advisor. We're a new media company by Texans for Texans, bringing on diverse perspectives to talk about how the future of finance is being built right here in Texas.
That's right, Steve. And you can go to texascapital.live. That's texascapital.live. Tell us who you think should be on the show and give us feedback, ask questions. We look forward to hearing from you.
It's great to continue to build this community. Let's get on with the show today. We got a lot of exciting stuff to talk about.
That's right.
I want to kick this off with a couple of kind of high-level market headlines. We had a down week last week. This week, we're starting to even out. The big headlines are around the government starting to open back up. You had over 900,000 federal employees furloughed, some working without pay, which is still remarkable to me. Finally, there's a deal afoot. It looks like that's going to start to be in the rearview mirror, and the market is obviously responding positively to that news. We welcome that change as well, just as citizens of this country. You've seen the NASDAQ 100 kind of leading the way, rebounding. AMD's been the big name recently with some really aggressive forward guidance on what they expect in terms of revenue from their AI business. AMD shares significantly higher, and you're seeing kind of the rest of the Mag 7 and the tech sector follow after a lot of volatility that we've seen in prior days. Bitcoin's had a rocky couple of days as well. It had tested that $100,000 kind of a psychological level, went briefly below, if I recall correctly. We're back off of that low now in the Bitcoin price markets. We were around 104,000. And I think there's been a tremendous amount of liquidations in the market. I count it as an interesting moment for Bitcoin as we start to have more institutional interest. There's enough liquidity where these drawdowns don't turn into these kind of huge bear markets. And you're starting to see a lot of support around $100,000 there. And that's kind of the future base as we move ahead in Bitcoin. So look, overall, the market's still trying to find a way forward. It's had a lot thrown at it between tariffs, the government shutdown, all this noise. We're trying to find a way forward. But overall, we want to get to, I think, the top news of the day, of the week, maybe of the month, especially for Texas, which is Coinbase announcing that they are going to reincorporate in Texas. Coinbase making big headlines this morning with this announcement. The Texas Blockchain Council, and you and I, Lee, of course, for years have been kind of envisioning something like this happening. Exciting to welcome them to the state of Texas. I wanted to invite you to give a little background that, you know, it feels like a big announcement today, but it's been years in the making, right? And fortunately, we've had a small part in that, I think it's fair to say, particularly yourself. Give us a little bit of perspective. Take a victory lap. How are you feeling?
Yeah, it's quite surreal. So in 2019, when I founded the Texas Blockchain Council, Texas was viewed as a bit of a backwater. So the Brookings Institute saying that Texas was a laggard in digital asset policy and the regulatory environment was not right here for folks to move. Fast forward to 2025, and that is very different. We see many of these exchanges have domiciled here. And of course, now Coinbase, the largest in the country, reincorporating in Texas from Delaware, which is a pretty traditional place to be incorporated. A lot of things play into that, right? Governor Abbott has been at the forefront of making this push. Of course, we saw in the 88th legislative session that Texas passed business courts. So that's similar to Delaware's chancellery courts to specifically litigate business issues and create case law here in these Texas business courts, which makes a lot of companies and their boards more comfortable with a Texas incorporation. And then we have even stronger signals from the legislature, like Senate Bill 21, and even bills before that and the years before that, that have ensured that the market signal is clear. Texas is open for business and digital finance as well. Senate Bill 21 obviously was the Texas Strategic Bitcoin Reserve Bill that Texas became the first state to actually allocate money to buying Bitcoin for the reserve.
It's a big deal.
Yeah.
And I want to read a post from the CEO of Coinbase, Brian Armstrong, that touches on that a little bit. He said this morning, Coinbase has always been about increasing economic freedom. And this factors into the state where we choose to incorporate. Texas has a strong culture of celebrating builders who are growing our economy, creating prosperity for all. They've also embraced crypto, as you just pointed out. By this metric, it was an easy choice. And he finishes, "Thank you, Governor Greg Abbott, for your leadership." And that's worth highlighting because this makes sense for them as a company. It's about more than just crypto, but as it pertains particularly to the digital asset industry, there's been such an incredible evolution of Texas really being a leader and embracing that innovation, and just a big day, step forward and continuing that leadership. I also want to read from a Wall Street Journal article that digs a little bit more into this. I think it sheds some more light around what went into this and why it's not just kind of like a vibe, oh, Texas is exciting. No, there are really concrete reasons that this made sense for Coinbase and is a harbinger of a lot more to come for corporations from all different kinds of industries that are seeing real problems in Delaware and other jurisdictions. I'll read from the Wall Street Journal article. Coinbase, the largest U.S.-based cryptocurrency platform, has filed with the Securities and Exchange Commission Wednesday that it is leaving Delaware. "We are reincorporating in Texas," this is written by the chief legal officer of Coinbase, "as it becomes more of an attractive hub for innovative companies like ours. It's a shame that it has come to this, but Delaware has left us with little choice. As a lawyer who's practiced for many years on King Street in Wilmington, I'm saddened by the need to depart. For decades, Delaware was known for predictable court outcomes, respect for the judgment of corporate boards, and speedy resolutions. These traits made the state the one-stop shop for many major corporations, which have brought in more than $1 billion a year in annual revenue. Delaware's legal framework once provided companies with consistency, but no more." He continues, "We're ambitious. We believe we can drive forward our mission rapidly if given fair conditions. Our decision to leave is about ensuring more predictable opportunities for the company, our shareholders, our customers, and the new on-chain ecosystem we're building." Says Texas offers efficiency and predictability, in part thanks to the recent corporate law reforms that enhance governance flexibility and legal predictability. He specifically mentions here, Senate Bill 29 modernized the Texas Business Organizations Code to codify the business judgment rule, which rightly empowers directors and officers to make the business decisions they need to innovate. Delaware wasn't always the go-to choice for companies. At one point it was New Jersey. At another point it was New York. We've reached another inflection point in corporate law. The more states that can credibly attract companies, the better, and we'd like to see Delaware step up to stay in the mix. But as for Coinbase, you can find us in Texas. It's a great finish. Yeah, that's worth a golf clap. And I want to talk a little more about SB 29 because he specifically cites this. And again, this is around the importance of people understanding that it's not just grabbing headlines. It's not just a single political figure. It's real legal differences about what it means to domicile a corporation in a particular place. SB 29 was authored and primarily led by Senator Brian Hughes in the Texas Senate. It passed unanimously out of committee on both the Senate and House side, passed broadly bipartisan on both sides. You had a few no votes, but broadly bipartisan. I think that's important to highlight that this isn't just a Texas Republican thing, though that is where the leadership came from. But overall, this was a coalition of what I would describe as common sense winning in Texas. The law went into effect just in May of this year. It modernizes the Texas Business Organizations Code to make Texas a top destination for business formation and governance. For formation, it ensures Texas law exclusively governs domestic entities like corporations and LLCs. It streamlines filing processes and allows flexible governing documents. In governance, I think this is where it's really important. In governance, it codifies the business judgment rule, shielding directors and managers from liability for good faith decisions, and permits waivers of certain voting requirements. For internal management, it introduces exclusive Texas venue clauses, jury trial waivers, and stricter rules for derivative lawsuits and records inspection, reducing litigation risks. I think this is what was really driving this. At the end of the day, you have these frivolous lawsuits. People get bogged down in all kinds of disputes that are detrimental to the core business and really don't empower shareholders all that much, because so often these come from people that own barely anything in a company. Whereas the great majority of shareholders are not trying to bring these frivolous lawsuits. That's a lot of what you see in this evolution in Texas around why companies are saying this is the right time to make a move, even though Delaware's kind of reigned supreme for so long. SB 29, there's a lot more to be talked about in this bill. It's only been in law for a couple of months now. we applaud Coinbase making headlines on this. I think it's the first of many more to come, and that's a good thing, not just for Texas, but for the whole country, to put an end to this ridiculous failure that is the Delaware system that squandered a great opportunity that they had in terms of leading in this area and provided an opportunity for Texas to step up. That's what democracy is all about, having 50 different states, having competition, and allowing someone to step up and provide a solution for businesses.
Yeah, Delaware got a little complacent, right? So that happens when you've been on top for many decades, as they have, and Texas is going to reap the benefits of it. Same as we talked about last week with the election of Mondami in New York. Dallas, in particular, is going to be reaping the benefits of it. So what I think is Jim Lee, the CEO of the Texas Stock Exchange, is reading the headlines today and reading this op-ed in the Wall Street Journal.
Big smile.
Has a big smile on his face, and he's seeing these thoughts and concepts that he has elucidated over the years coming from the pen of Paul Graywall, the chief legal officer of Coinbase.
Yeah, really amazing to see this. We plan on covering this a lot more and bringing a lot more different perspectives around corporate relocations here to Texas. And part of what's characterized Coinbase, I think, is being a leader, kind of not asking for permission, disrupting things, and that is my intro into our next segment here, which is to bring a guest on and talk about broadly new media and that disruption of the legacy media space. Obviously, this is something we're a part of with Launch in Texas Capital Live here. We want to bring in our friend, someone that's been working with us for quite some time through Texas Blockchain Council, and that's Andy Samu of Disruption Banking. He's an editor there. Andy, thanks so much for joining us. This show is Texas Capital Live, but it's also a global show because the whole world comes to Texas so much. And so we're glad to have you join us from London. And I know it's a little bit late over there, but thank you so much for making time. Andy, welcome to the show.
Super, thank you. Great for being able to join. On the topic of Delaware, we're fascinated by that over here. So really good that you were talking about it a moment ago. And Coinbase is a disruptor, especially amongst institutional investors. It's a great step forward for Texas as well, though, because the way they've talked about how great Texas is, yeah, I do think it's good. But we're here to talk about media. And I think your great president has a problem with the BBC that maybe would be interesting for us to talk about a little.
I did see some headlines around some strife between President Trump and the largest media outlet there in England. I mean, Andy, I think it'd be great to give us a little background yourself, kind of how you came to this. Disruption Banking as a platform that really took advantage of this big shift of new media displacing legacy media. And then you're hitting the nail on the head with a concrete example in terms of what we're seeing with BBC. And we just wanted you to come on and give that perspective to not just people in Texas, but just showing how this new media disruption is really, it's a global phenomenon, just like the economy itself has gone global as well. So give us your perspective, a little bit of background around that.
Super. Well, I mean, being here in London, for us, the Financial Times is one of the topics we like to talk about. You have the New York Post, you have other magazines in America, but here it's the Financial Times that dominates, I think, our news. It's like Bloomberg in America. And with Financial Times have multiple brands. They have a brand called The Banker. They have a brand called Sifted, which caters for fintech companies. And many years ago, we sat here and we looked at the Financial Times and we wondered whether they were offering the right product for the market. Now, it wasn't because they weren't offering the right product, but it was because Bitcoin had happened. And the legacy media in the 2010s and even till the late 2010s were very complacent when it came to crypto. There's a lady now who's Merrin Somerset Webb. She's a editor at large at Bloomberg now. She's moved from the Financial Times, and she wrote an article in 2022, I think it was, about Bitcoin and how she held 0.00009 Bitcoin and how that allowed her to have an opinion. Now, at the time, people were reading it avidly, going, "Oh my goodness, she has so much Bitcoin." But of course, the problem wasn't whether she had Bitcoin. The problem was that we weren't really allowed to talk about it. Google didn't like the word crypto. Google didn't like the word Bitcoin. They liked Dow Jones, S&P 500, Fortune 500, even Delaware. But they didn't like the word crypto. Now, what happened over the last 12 months is we've seen a dramatic shift. And on the one hand, we've had a huge invasion of ChatGPT and Grok and other AI instruments that have actually taken traffic away from Google. But on the flip side, we've seen with topics like the Genius Act and Donald Trump's pro crypto stance that the word crypto is no longer bad. Words like XRP now, you type them into Google and 10,000 people will have a look at the article. 2 years ago, that would never have happened. So we've seen a shift. The problem with companies like the Financial Times going forward is how are they embracing this shift? Because we are talking about Bitcoin ETFs today.
Yep.
And when you're a journalist and you have to cover a topic like Bitcoin ETF, it's not a topic that's easy for a journalist to cover. You know, you have to understand the underlying mechanism, you have to understand blockchain, capital markets, stock exchanges, all in one. When we started many years ago, we used to call people and they used to say that they don't know many outlets that understand how to mix capital markets and the crypto boom in one. So this year, in January, when crypto became clean, our magazine started to fly. Now,
That's
that's
great.
not to say that the media situation elsewhere hasn't changed. We've noticed that a lot of companies that are not in progressive, innovative brands like crypto or long blockchain IST topics are struggling for traffic because Google has lost traffic to Grok and
Mm,
ChatGPT.
Hmm.
And on aggregator sites now, they're not just looking at how much authority you have as a company, but they're also looking at how much AI you're using, how much AI likes you. So if you type something into ChatGPT, it often sources where it's coming from, and this has been a new ball game for all of us in media. And some of us have done well, some of us haven't. I'm afraid companies involved in fintech are not doing as well as companies that are embracing the crypto trend when it comes to our sector. So maybe that helps with a little bit of an overview, because we're a bit distinct here, aren't we?
I think that's really interesting perspective, Andy, particularly around this kind of shift of for years you'd heard about search engine optimization going to AI optimization. And in the past shift from print to digital media, the legacy media was so slow. They came kicking and screaming. So many of them had to, go bankrupt before they would embrace that digital wave. Now you're highlighting that you've got this AI wave coming in, and likely you're going to see a lot of that same reticence
Yeah.
to recognize that there's been an evolution in the marketplace. Andy, from the perspective of disruption banking as a platform, you sit in London, but I'm curious what your interaction has been. You do a fair amount of global travel. What have you seen that has piqued your interest and the interest of your readers? You were in Texas just a few weeks ago here at an event that we were hosting. And so you see a lot out there as a journalist and bringing that to consumers all around the world. I just want to pick your brain a little bit or give you an opportunity. What have you seen out there that maybe people are doing right, maybe they're doing wrong, and what can we do here in Texas to get more eyes on us?
Well, I think that Hong Kong and Singapore have to form any discussion around where we're seeing innovation. We're a media partner of Singapore FinTech Festival, which actually kicked off this morning. 65,000 people, the biggest FinTech festival in the world. We're very proud of our relationship with them. The innovation that comes out of Singapore is incredible. Today, Franklin Templeton agreed a deal with a company called Canton Network, who we've worked with in the past through Singapore FinTech Festival, tokenizing real world assets. Again, these relationships are forged during events. When people participate in events. So we're very proud that we're able to meet the company that's currently working on the new digital euro. We met that company in June. But when it comes to the actual news we're seeing, I think the biggest problem or the biggest things that we've seen this year is both Liberation Day and the after effects across the global community when it comes to that. It's highlighted topics like TSMC, like nobody's ever understood it before. And it's also highlighted topics like SIMC, which people may not have heard about either. And I think that because of Liberation Day and the way that people have looked into individual relationships of countries, we've become a little bit more aware of both investment opportunities and where there are imbalances. Here in Europe, we have an ongoing this debate about whether leading telco companies like Huawei or ZTE from China should be here. We have a massive problem with electric vehicles that are coming over from China and standing dormant in parks all around Europe. We have tariffs in place. They have tariffs in place against Volkswagen, another huge story we have here in Europe at the moment. And today, I think because of the way that Trump is highlighting what he's doing. People are just becoming more engaged in the discussion. Who is Xi Jinping? Why is he important to us? Why is the war in Ukraine going to affect my petrol prices? People are seeing this more, I think.
Mm.
And this is one of the biggest trends we've seen. That's not to say that AI isn't causing us concern, because there is also talk of, and we've heard it from your side of the pond, that the AI market is propping up the economy a little bit.
Yeah.
Um, which probably is the last point I wanted to make here. So we have an editor at large at Financial Times who was on the TV 2 days ago discussing the case with Donald Trump, and she suggested that in her role in New York and in Wall Street, that there was a lot of fear
Mm.
because of economic policy. Now, a few hours later, Bloomberg published a report about economic slowdown and how, despite disruption, it's the most positive reaction by CEOs since 2007.
Mm.
I don't know where she gets her data from. I mean, I look at Bloomberg, that seems to be relatively correct. When I talk to business people, they're not bearish about the economy, but for some reason, a leading editor of another title will say something else. Now, I don't know why that is, but these are topics that interest me, and we're seeing this more. We're seeing this conflict of interest, this misunderstanding, but we're also seeing this heightened engagement with topics.
Now, Andy, you mentioned AI. I want to backtrack a little bit so that we can look forward. How do you think new media companies and just the media landscape in general is going to adjust to AI, adjust to not having that top ranked SEO? I'd love to have like news articles that the journalists don't worry about like a sensationalist headline because they feel like they need that to get into the SEO stream. But if they have good content and they have quality information, then AI can look past the headline so that we get a little bit less clickbait and a little bit more depth. Do you see that happening? And of course, now with AI, you have like an infinite amount of content that can be out there, but not all of it will be good content. How does the monetization of new media change? And do you think that companies are going to embrace that quality over quantity piece?
So we're seeing giants like WPP, and we've got a company here in the UK called S4 Capital, which is another huge marketing agency, that their stock results have collapsed this year,
Mm.
mainly because of AI. Now that doesn't affect the editorial teams. Editorial people are professionals, but the pay adjustment for our industry is low. So there wasn't much more to lose. But when it comes to public relations and marketing agencies, they have taken a hit because people can go into ChatGPT and create a marketing strategy. So we have seen a shift there. We've seen a lot more articles actually being written by AI, and an apology written at the bottom of them saying that this was generated in AI automatically because it picked up some aggregator.
Mm.
Wikipedia is an area that we're looking at the moment as well. They had a recent problem with AI taking too much data out of Wikipedia, and they asked, I think, for the market to recompense them a little bit. But I haven't seen much change in the actual legacy media. And I'll tell you the most ironic thing about our industry: there are still magazines that are printed or in PDF. Yeah, quite a lot. You'd be surprised. There really is quite a lot. And they go around and they try to interview you, and they say, "We'll put you on the first page." And it works. It still works.
Mm.
Okay. Now that's been going on for 20, 30, probably forever. So if that's still going on, then I wouldn't say that our industry is going to change dramatically. I'd say it's the periphery around our industry that is going to go through an evolution at the moment.
Fascinating.
Well, look, Andy, we appreciate you jumping on the show, bringing that global perspective. I can tell you some years ago, I had an opportunity to travel to Singapore. I recommend that everyone go. It's an amazing city and just incredible to reflect on, a place that, a single generation ago was fairly impoverished, and now it's just such a kind of a melting pot of the Asian economy, of Asian culture. So I really enjoyed that trip. I thought that was good perspective you had around the events that you're doing there. Is there anything kind of as we wrap up here that you want to let us know around what you're working on, what Disruption Banking is doing, events you've got coming up, things to highlight? Let us know what you think, and we'd like our listeners to hear that as well. And thanks again for coming on the show. But take us out with something else you've got going on.
Absolutely. So I think one of the events that we support the Singapore Festival with is an event called Black Swan Summit. Black Swan Summit is taking place in Western Australia, in a place called Perth, which I like to
Yep.
compare to Texas a little bit. They've
Mm.
got cowboys, they
Yeah.
have gold mines, they've got all sorts of infrastructure and minerals and what have you. Now that event's coming up next March. We're hoping to support them, and that's another event where frontier pioneer types are going out talking crypto and spreading the word, and that's what we're about, and that's what we want to keep doing, and that's why we love what you're
Love it.
doing, chaps. Thank you.
Love it.
That's great,
Andy,
Andy.
thanks for coming on.
Sir, appreciate you.
That's a great perspective from Andy. He does travel the world. Every time I see him a lot, I see him more in person than virtually, which is saying something because he's based in London.
It really is, because I'd have to say the same thing.
Yeah.
He makes his way over to Texas quite commonly, but quite frequently, but then finds himself all around the world. It's funny he mentions Perth. I'll tell you a funny story about myself. I used to live in Houston, a lot of oil and gas business there, obviously, and so you'd get a lot of guys from Australia that would come from Perth because that's kind of the mining and oil and gas capital of the country. I became friends with a group of them and ended up playing Aussie rules football, which nobody really follows here. It's like a rugby with more kicking.
Yeah.
And I was terrible.
Yeah.
I was terrible. Promptly broke my pinky, retired from Aussie rules football. But I retained an interest in going to Perth at some point in life. So I haven't made it to Australia at all. But weird kind of anecdote from life where I was like, okay, Perth, didn't even have that on my radar. But seems like a pretty cool place to go visit. So.
Well, Qantas just announced a direct flight from Sydney to New York City, I believe.
Really? Okay.
Yeah, and I think you can also get a direct from Dallas.
So more accessibility. We'll put that on the list then.
Yeah.
We'll see if we meet Andy down there. Before we wrap up, I want to talk about a company that had a really big week. A lot of news announced around this, and that is Rumble. We are streaming on Rumble right now.
As are we streaming on many other platforms,
we
X,
are
LinkedIn, everything else.
Multi-platform, and that's part of this future of new media.
Yeah.
Is you have multiple channels, so you can pick the best place for you, and for some people that's Rumble, and for others it could be X, and so on and so forth. We're on YouTube, we're on LinkedIn. But I will say that the setup and just the interaction as a creator with the Rumble platform has been really good, really sleek. No issues, and so I commend them on that. A lot of growth there. They announced third quarter results, and there was kind of mixed reactions to this. I thought the interesting thing I wanted to highlight was just the revenue for third quarter was $24.8 million, slightly down from $25.1 million. Okay, typically down is not a good thing, but the highlight there was that last quarter was the election. Mm-hmm. And so you were at like all-time highs in terms of engagement. Rumble has generally been tilted towards political type of content. And so to see only this kind of a relatively very small, less than 1% drawdown in revenue from a year prior going into the election.
It'd be like a retailer at the holidays, right? If you had the same level of sales in Q1 as a retailer did over Christmas, or only 1% down, people would be saying that retailer is growing like gangbusters.
I think the CEO should have said that on the call probably, because that was a good way to characterize it. And it's part of a broader strategy that Rumble has put together. They're pivoting a lot towards gaming. There's a lot of gaming coming onto the platform. Big announcements and other new products that they're going to roll out to make it kind of the creator-friendly product. But the announcement I want to move to is one that will sound familiar to us, which is an announcement of their acquisition of Northern Data. Northern Data years ago started with a focus on Bitcoin mining.
Yeah, they were a member of the Texas Blockchain Council.
As you'll probably recall, I'm sure. And I actually ran into some of the team in a presentation out in Silicon Valley at an event that NVIDIA was hosting. They were presenting around the transition of Northern Data from sort of spinning off the Bitcoin mining side of things, and then coming out as an AI-focused, what maybe some people would describe as an infrastructure provider in a neo cloud to serve that area. Rumble made headlines recently as well because there was a big outage on AWS maybe 10 days ago. And they were quick to post, we're up, we're running fine. So was Elon Musk, Grok's not down. We're not on AWS. So the value of this kind of infrastructure has really come front and center. This is a really significant acquisition that they hired on the heels of a strategic investment from Tether of $775 million some time ago. that has allowed them to go out and do these kind of acquisitions to align more and grow as kind of like an IT services provider, make sure that their cloud is, top of the market as they look to continue to grow that. So another chapter in the story of kind of former Bitcoin mining companies finding a home in AI and then successfully like really building that up to do bigger and better things. I'm excited to see what Rumble and Northern Data will be cooking up together. Along these lines, Rumble has always been closely aligned with Tether. They announced a $150 million commitment from Tether around these GPU services that will primarily now be powered by this Northern Data acquisition. And so right off the bat, there's this big commitment. I think Tether, like so many other companies, is recognizing that you want to control your own destiny in terms of your data and the inference of the AI that supports your business. So how do you do that? You go and you find a partner, and Tether has chosen to align with Rumble. They're obviously out raising a lot more money. They have a whole U.S. unit now, right? So I expect this is not the last news that we hear from Tether around data center infrastructure, AI infrastructure, but this is a big one, $150 million with Rumble. And then expanding on that commitment as well, Tether announced a $100 million advertising commitment on Rumble. This has been a big part, huge commitment, and this is a part of kind of the positioning in the market that I've seen from this company, from Rumble, is to become the destination, the most creator-friendly place. How do you be creator-friendly? You pay people more by bringing in advertisers, right? And this is that first big next step in kind of a premier advertiser in Tether that has a huge global footprint, huge retail. Almost anybody is a potential consumer of Tether.
That's
right? And so I think this makes a lot of sense. It really moves the needle for Rumble. And it's part also of the rollout of Rumble Wallet, which is going to be a new embedded kind of payment-enabled sort of digitally native wallet that is focused on allowing users and creators to market themselves and earn in Tether, US dollar-backed stablecoin. They have XAUT, which is the gold-backed Tether coin. Not as big as Tether dollar-based, but still has some material volumes there. And then Bitcoin as well. So you see this kind of ad by going behind, building up value on the platform that will attract more creators and at the same time onboard them on to this Rumble wallet. So you see this kind of whole ecosystem that they're building out. Another partnership that Rumble has had is with Perplexity, the AI company. And I think it's a really strong value proposition that they are bundling Perplexity with Rumble Pro, the Pro subscription. So you get both Perplexity Pro and Rumble Premium subscription under one deal, and I think it's $20 a month. And this is part of this broader, of course you see this with X and Grok, XAI. Like social media is a natural ally of an embedded chatbot, some kind of search function, and now we're even going to images and video. So you have that now between Perplexity and Rumble. You've seen a little pop in the Rumble stock. I think the market's still trying to find a way forward. I thought a fun way to dig in a little bit into the story around Rumble and the stock is on Perplexity Finance, which I've started to use myself. I've just found it to be a good tool, easy to look companies up, gives you all different kinds of perspective. So I wanted to start with kind of the most recent sort of daily update that Perplexity Finance provides on Rumble, which is trading just over $6 a share right now. It says, Rumble's down about 0.8% after reporting the third quarter results that showed a slight year-over-year decline in revenue, as we talked about, and a drop in monthly active users, dampening some of the investor enthusiasm despite an improved net loss and the announcement of a major acquisition, which is this Northern Data deal that we were just talking about, along with the GPU services and Tether. So these are the headlines that have been kind of driving the stock forward, even if we're not seeing a huge run-up in the stock. It goes on and it gives some other commentary, and so I wanted to share that as well. And so you have user growth and retention trends. It says strategic investments and less restrictive content policies have attracted top creators and sustained engagement. particularly during election cycles and major events. Improved retention and rising, this is a little term they come up with, RPU, average revenue per user, suggests momentum can be rebuilt and user growth will drive future value creation. That's your bullish view on user growth. I'll give a bearish view as well. Recent data points to a sharp decline in user numbers from 67 million to 47 million, coupled with high churn rates. These trends cast doubt on the effectiveness of Rumble's growth strategy and threaten the company's ability to scale with enough loyal users to support its ambitions. I think it gives good perspective on both sides. Ultimately, a lot hinges on this ecosystem that's powered by this kind of digitally native Tether alliance. I'm bullish on that. I think Rumble's headed in the right direction. That's my view on this. I think we've got some other commentary. What do you think, Lee?
Yeah, so when Perplexity analyzes their profitability and monetization outlook, the bullish view is that they could continue to see double-digit revenue growth, fueled mostly by creator loyalty, creatives that are on the platform creating more content, and as you said, a higher revenue per user number that continues to come in. And I think part of that also is that the creators are going to make more per piece of content.
That's critical.
Depending on how quality the content is or how many watch hours it takes. But those things can go hand in hand, right? You get more revenue per user who's digesting more content, who's taking more ads in, and then on the other side, the creators are making more as well. So there's just a more it's a more dynamic marketplace. There's more money in that marketplace, and I think in some of the other social media marketplaces, the juice is kind of squeezed out, more so than we would see like in Rumble or even TikTok, which I'm not really a user of TikTok, but I'm trying to become one because, of course, TikTok US is now a thing, and that seems to be certainly a growing trend here in the US. The bearish view for Rumble, though, is so despite that top-line revenue growth, net losses remain persistent and margins are still negative. There's high operational costs, kind of an unproven monetization model with some of the stuff that they've announced. And of course, they've got, kind of a high OpEx, lots of people there, whereas Tether's sort of the opposite, right? They have the highest profitability per employee than any company in the world. So maybe that makes a good yin and yang for that partnership. So
it's a good friend to have. I think it's interesting on the user growth side. There's a lot of that bearish focus around the decrease in numbers there. We talked about that kind of election-driven sort of one-off item.
Yeah.
But the strongest bullish argument here is a little bit, if you make it the best place for the content creators, then the viewers will come, right? I think that summarizes the strategy here. Make it the best place for content providers through top-tier ad partners like a Tether, through embedded AI with a partnership with Perplexity, which is an emerging kind of bigger and bigger name in the AI landscape. I think it makes a lot of sense. And as they try to give more offerings of content that isn't so politically focused, I think that'll always be the core here. But they're going to bring more of the gaming in. You look at more of the finance and digital asset markets, which is another area that Rumble is looking to grow. You couldn't have better partners than Tether and Perplexity that are going to bring that kind of user experience with those tools that they're looking for. I'll have to engage with Rumble Wallet. I think it'll be a cool thing for us to try out. So we'll note that as something for the future. I think they had a little bit around their positioning in the digital video market. And you want to share some of the commentary on that?
Yeah, I mean, the near-term perspective is, from a bullish perspective, is that Rumble is uniquely positioned in the alternative video space, appealing to creators seeking less content restrictions and to viewers preferring alternative platforms to mainstream services. Yep. So I think that's to the point of making it content-centric. The bearish view is the competitors, the entrenched competitors like YouTube and Twitch, of course, the traditional legacy media as well, are seeking to undermine Rumble's ability to realize meaningful market share gains. It's interesting that we're looking at YouTube as a legacy media company at this. I mean, they're sort of legacy of the new media, but they're certainly not legacy of
legacy new.
Legacy new, yeah.
We need that word now as well. No, I like this bullish and bearish viewpoint that that Perplexity Finance does. It kind of gives you different ways to think of an underlying business, in this case Rumble, and the value of the stock. I think they did a good job laying out some of the key pieces, and it comes down to, does this Rumble wallet and Tether kind of alliance make sense to drive more users and more content? I'm willing to say that I expect it to work.
Yeah.
That remains to be seen. The stock's still kind of trying to find its footing and how it feels about that.
It kind of reminds me of the ESPN bundle package with Hulu and Disney, right? Everyone's pretty angry about YouTube TV pulling, not coming to agreement with Disney about the ESPN NFL games, and essentially all these folks have now added ESPN to their Disney and Hulu subscription.
Yep.
That is a crazy fight, and it's a high stakes fight because you can piss off a lot of people pretty quick, and really lose some customer loyalty there. I'm not sure who is winning or losing that PR battle right now. My money would be on YouTube TV because they're making this offer, and Disney is refusing and really pushing everyone to spend more on their platform to get ESPN added to their bundle.
So here's my idea then. Playing off of that, it's my proposal for Rumble. Business idea here. Tether's got enough money to come up with good ideas, right? Just figure out how to do a streaming service that is just like the core American sports. You have so many of these, well, you have ESPN and 30 other channels. It's like, I don't want 30 other channels. In fact, Rumble could just get SEC college football. How many subscribers would you get just off of that? Forget about making a sign up for all this other junk that we don't want. Just get the game, and just what does that cost? And I think people would gladly pay for it. Instead, we have this never-ending battle going back and forth, and who owns Monday Night Football versus Thursday Night Football.
Oh, I know,
it's just a complete.
And then Amazon
completeness.
now is in the mix with the rights to, I believe it was Thursday Night Football. I think Amazon's got Thursday Night Football.
Nobody knows what anything costs anymore with all this bundling and whatnot.
Yeah.
So there are some pitfalls there. There are definitely some pitfalls there. We'll have to keep an eye on it. But good to see Rumble continuing to innovate. And so, like we said, we gladly make this show available on multiple channels, but Rumble will continue to be a part of that. I think it's a cool story. Lee, this is a great day to be a Texan. I think we got to reflect on it again. It's awesome to welcome a company like Coinbase, but it's also awesome to know that it's the first of many, many more to come. We hope to have many of those people here on this show to talk about that and play our part and continue to make Texas the best place to invest and build a business.
That's right.
Thanks for joining Texas Capital Live.